Our next session is titled The Evolving Payments Landscape. As we head into 2019, all signs point towards a more digital future for the world of payments. More so for a country like India, a market that has over the recent years emerged as a global payments innovation hotbed. Intense competition and innovative payment solutions have been on the rise, all for the share of consumers' wallet. Mobile wallets have been the poster child for India's post-demonetization phase. Their ubiquity, simplicity, and low cost of adoption have differentiated them from the other forms of digital payments. However, the year gone by was a stark reminder on the need of payment experience to remain seamless, interoperable, and secure while being compliant with the regulatory requirements. I would like to introduce the moderator for the session, Mr. Navneet Munot. Mr. Navneet currently serves as the chairman on the board of CFA Society India. He is the Chief Investment Officer at SBI Funds Management Private Limited and the Director of SBI Funds International Private Limited. Previously, he served as the Executive Director and Head of Multi-Strategies Fund Boutique at Morgan Stanley Investment Management. He has also worked as the Chief Investment Officer at Birla Sun Life Asset Management Company Limited. He is a postgraduate in accountancy, business statistics, and is a chartered accountant. Mr. Munot is a chartered holder of CFA Institute and Chartered Alternative Investment Analysts Institute. He is also a financial risk manager. I request Navneet Munot to come on stage. Thank you.
Thank you. Good afternoon. Let me begin by wishing everyone a very happy Women's Day. Actually, every day is a Women's Day, but of course, this is a day when celebrations are little more than the other day. And good to see so many of our women members in the room today. Our society is a society of 2,100 strong group of professionals, but we are a part of a global community of 150,000 members across the world in 150 societies in different countries. And the FinTech conference today is in line with our tradition of bringing the best insights, best ideas, and best concepts from around the world. Our endeavor at annual CFA FinTech conference in Bangalore is to create a platform to promote advocacy, to promote education, to promote collaboration among various stakeholders who are involved in FinTech. And I'm sure this platform will provide opportunities to all of us to understand, deliberate, and reflect on ideas that we discussed today. Because we at CFA Society are committed to a future of finance which is for the ultimate benefit of society at large. With powerful forces like digitalization, differential regulation, disintermediation, maybe there were one or two more Ds here, there's a tectonic shift underway in the architecture of finance. And I can add maybe one more D to that. The demographic shift with millennials taking charge is accentuating that change. And with a large population of tech literate but financial underserved, I mean India is uniquely placed for growth and for innovation in the area of FinTech. In fact, as per EY FinTech Adoption Index in 2017, after China at 68%, India has the highest FinTech adoption rate of 52%, much higher than United States and UK, which was 42%. A lot of people believe that we may have missed the manufacturing bus, but maybe at least in the area of digital finance, we would be the leader in digital finance, global leader. I was reading this, Dan Bricklin has written, in big business, when you need to cross a river, you simply design a bridge, build it, and march right across. But in a small venture, you must climb the rocks. You don't know where each step will take you, but you so know the general direction you are moving in. If you make a mistake, you get wet. If your calculations are wrong, you have to inch your way back to safety and find a different route. And as you jump from rock to slippery rock, you have to like the feeling. We have amidst us an entrepreneur, a thought leader who enjoys that feeling. And he always has ideas that are big and the ideas that are bold. Kunal is the founder of Cred and FreeCharge. Post FreeCharge acquisition by Snapdeal in 2015, he served as an advisor to Y Combinator, Sequoia Capital India, and Times of India. He recently launched Cred, an initiative to celebrate and reward the most credit-worthy people of India. He's been an investor in ventures such as Gojek, Zilingo, I hope I'm pronouncing it right, Kunal, Unacademy, Razorpay, and many more, along with holding the position of chairman at the Internet and Mobile Association of India in 2016. Kunal is also a voracious reader and is fascinated by the human mind and behavioral economics. Please join me in welcoming Kunal Shah.
Should I kind of?
Whatever you prefer.
I prefer this. How many of you know about Cred? Please raise your hand. Okay, that's pretty good. Thank you so much. For the rest of the guys, please ask your neighbors how to get on the app. I thought I should probably talk about things beyond payments because the lines are blurring on what is fintech, what is payments, what is banks, what is e-commerce, what is chat company, what is phone company, what is a telecom. It's all getting blurred. And it's important that we understand the core principles of what's happening over here. The first thing first is, let's talk about, we talked about Women's Day. I have a not so pleasant stat to share with you. Last year, 20 million women left the workforce in India. We cannot grow our per capita income with one gender working. Historically speaking, only one country has crossed beyond $3,000 per capita with such low women participation of labor, that is Saudi Arabia. We don't have lack of oil, so we should not optimize for that. Even if we get the oil, we don't know if we'll get it. So second thing is only 10 to 12% of urban Indian women are working. And that is a more scarier stat. Most people don't realize that, but over there, 10% of women are in women. If you go to the airport, only 10% are in the queue of women. In metros, you see one compartment for women, so there are lots of data points if you don't believe that number. In fact, Bangladesh is growing extremely fast on per capita because there is 63% participation on women in Bangladesh, in urban Bangladesh. And that is actually growing their per capita income very rapidly. In fact, Pakistan recently crossed us on women participation of labor in urban Pakistan, which is not something to be proud of if we really believe that we are more progressive than them, but we are not. Data is unfortunately very cruel way of looking at reality. Second thing is about, you mentioned about millennials. I have a slightly different view. I think every home in India currently has a chief technology officer. That person is anywhere between 14 to 18. That person is showing the entire family how to use technology, phone, apps, new features, all of that stuff. And slowly but surely, the chief technology officer is becoming the chief procurement officer. So while you are building the products for, let's say, a 40-year-old, 50-year-old, you don't realize that the actual consumption choices are being made by a 14, 18, 20-year-old. And they absolutely know when a product is bad, right? I had one youngster tell me, I asked him why you don't want to join this company. And what I love about millennials is that they are very efficient in communicating. He told me, yaar ye bahut uncle company hai. and that one line was so efficient in communicating what that thing meant is that this company feels like an uncle, which means that they can clearly differentiate between what is new age versus not new age, right? In fact, I have found my own version of finding out who's uncle or not. It's not age, by the way. It's how you hold the phone. If you type like this, or if you type like this. I'm sorry, I'm making fun over here, but we have to realize that this is a stark reality that very quickly the guard is being given to youngsters, and this generation is disproportionately more smart, even if we do not want to believe that. In fact, historically speaking, no generation ever believed the next generation is smart. but it's always been the case. But the delta is even bigger because they were born into internet. They can easily call out any nonsense you tell them, and by looking at Wikipedia, YouTube, and tell you that what you're saying is absolute nonsense. When at least some of us were growing up, we could not tell our parents about this kind of stuff. The other joke that I realize is that a lot of millennials tell me is that they have figured out how smart we are by looking at our WhatsApp groups and what kind of stuff we share and chat and believe in fake news. So they have figured out that all these adults that we are thinking that should be respected are not very, very smart because they believe anything. And that is scary because they are almost creating a parallel world which is very, very different. The third thing is about trust. Sometimes we forget that India is not one country. India is 25 countries put together to become one country, and mostly by the British who wanted administrative convenience. We were not one country. In fact, if this conference was held in China, I would be speaking in Chinese, but I'm speaking in English because English is the neutral platform that we all connect with, and we forget that. We also forget that cricket is our neutral platform to come together, which is not from India. We forget that tea that we connect with is not from India. We forget that we order something in office, we have a party, we order pizza, not from India. We also forget that khichdi is not from India, biryani is not from India, samosa is not from India. Why am I saying these things? It's important to understand that this country has prospered through finding neutral platforms of trust. And unless you understand this core principle, you will not understand how the world is changing quickly. Let me, the conference has a nice thing, disruption, disintermediation, and what's the third thing? Decentralization. Let's talk briefly about these three things from my lens. Let's talk about what is disruption. I will give you a small example through this. How many of you have tried WhatsApp payments? Please raise your hand. Okay, 10-20% over here. Whenever a large product that has huge amount of distribution and trust decides to make a feature, they wipe out a product. Let me explain what I mean by that. All of us in the past used to have digital cameras. All of us bought one. And then a product that was more distributed, more powerful, and was in our hand every day, decided to add that feature, and then digital cameras just died. Or in fact, it became an icon on the smartphone. If you look at your smartphone, most of them were actually products before. They become icons inside your phone now, right? I'll give you a historical example. In the past, when trade was inefficient, like hundreds of years ago, English did not have good numeric system, right, to do trade. And they used to be having the Roman numerals, which was not very efficient of communicating numbers. And they realized that the businessmen that came from India, Asia were using the Indian numeral system or the Arabic numeral system to do trade efficiently. So the English traders or the European traders started using that numeral system because it was more efficient to communicate numbers. And somebody from, let's say, if there was a product manager in English, he realized that, oh shit, we are having disruption coming, where the Arabic numerals are replacing our numeric system. They quickly change their numeric system to Arabic numerals. So English numerals are actually just copy-paste of Arabic numeral system, and therefore a product took some other product and made it into a feature, right? So English numerals are actually a product that existed before and made it into this product. And why am I saying these things? It's unless you understand this core principle on how product eat other products, you will not understand what is happening to the world right now. Today, when WhatsApp launches payments, they have currently 300 to 350 million daily active users. The consumer's trust on WhatsApp is significantly high because they share so much of personal stuff on that they almost trust it more than, beyond their closest family members, they trust WhatsApp. When they launch a feature, they can wipe out everything. And therefore, we see a lot of companies trying to push that it stays localized, all of that. There is like no other payments company has faced so much of regulatory hurdles because it can potentially disrupt everything. The reason it can disrupt everything, because most likely when we tell somebody that, oh, I need money from you, you need to send me money, it's already on WhatsApp. In fact, I spoke to the WhatsApp guys and they told me that their idea of launching payments came from that people were taking bank transfer screenshot and sending it on WhatsApp. And that was a great idea for them, that if they're doing this anyways, they're only going out of WhatsApp to do this. I don't know if you have noticed, but now videos play inside WhatsApp. Earlier, you used to go to YouTube and other things, and therefore it became a feature in WhatsApp. And all of this is going to result in more and more time being spent on that. But it doesn't stop at WhatsApp. If potentially a telco, which manages to get 500 million customers to use it on a 8 to 9 hours, 10 hours basis, if they decide to do lending, will they disrupt banks? And what stops them from lending? If a hardware company, which has got 300 million phones being used, they know more data about you and all your behavior and your financial behavior. If they decide to do investments and mutual funds, does anybody stop that? And a lot of times we say, oh, they don't have the expertise, but we don't understand that distribution has 10 times more power than capabilities, because capabilities can be bought. Distribution is extremely hard to build. And today, getting 500 million customers has become so easy. The time, let's say a telco will take to get 500 million customers is going to be a matter of 4 or 5 years. Earlier, to get 500 million customers was potentially not even possible in one company's lifetime. This is possible because the world has become like a superconductor. Let me explain what I mean by that. A superconductor is something where all the atoms are nicely placed next to each other. So when you pass a current from it, it reaches the other side extremely fast because all the atoms are connected together. All of us are now like atoms in the superconductor. Let me give you an example, it's much easier to understand. Whenever a joke is made about politics or celebrity, in less than 12 hours, we all know that joke, right? Let's imagine what happened during demonetization. How quickly did you know about demonetization since it was announced, even though you were not on television that time? Less than 2 hours? And across the nation, it reached that fast? That is what is happening. Great ideas, great jokes, great bad news, anything is spreading extremely fast. When things spread extremely fast, the distribution platforms that are emerging are even faster. And when you get high distribution and high trust, you can make anything into your feature. And that is, to me, a great place to understand disruption and disintermediation. Let's understand decentralization from a different lens. If I had to give a poor example, is you will observe one thing, that conglomerates emerge in countries that have generally low trust. You will not see a company doing anywhere from salt to car to ACs to everything in other countries where there is high trust, because people specialize in niche brands and do things. When there is low trust, a company like Tata can do 25, 30, 40, 50 industries and just put Tata in it and people will start buying. The same thing can be observed let's say, super apps. Like if Paytm launches a new feature, it will be adopted quickly because people trust that brand, and therefore when they launch a new feature, it becomes easy for people to do that. Super apps don't emerge in America. America does not have super apps. There is one app for one thing, but over here, you will see concentration of features in fewer brands. You can also see that in nepotism, right? You will see that people prefer to watch movies of celebrities' kids because they trust the other celebrities and they're like, oh, this guy's son or this guy's daughter, it's okay to risk that. You will not go to watch a new actor's movie and putting 500 rupees for that, right? So there is massive concentration of trust when there is lack of trust. Sometimes we don't understand the lack of trust problem because we live in this country, we don't feel it, but when you go abroad, you will observe it. For example, in India, everybody checks the total of restaurant before paying the bill. Or when we give our car for servicing, we empty the fuel tank. And we do demand draft and not checks, right? This is all mistrust signals. In fact, 1972, Dr. Arrow won a Nobel Prize, which proved that any country that has low trust always has lower economic growth, right? And therefore, removing trust barriers is very, very important, right? In fact, we forget that just few years ago, taking a cab in Delhi or taking a rickshaw in Bangalore was a nightmare. You'd almost get ripped off, right? Now we just assume that Uber and Ola just gives you ratings and we just work. And we forget that they are not taxi companies, they are trust companies. We forget that Airbnb is not a hotel company, it's a trust company. They allowed two strangers to trust each other without somebody who is managing the centralization of trust. And therefore, according to me, decentralization is a function of you do not need a brand to create trust between two people, right? Let's take a simple example. Let's say a guy makes shoes and one person buys shoes. And right now what happens is there's a brand which makes the manufacturing happen, puts that logo in front of them, and then you buy. They are putting a trust and quality symbol on top of that. But if now humans can trust each other without a central brand, the wealth is going to go through a massive entropy, and it's going to get distributed even more. An easier example to think about is advertisements. Today, an influencer on Instagram who has 10 million followers can get more awareness of your brand versus a TV ad. And that is, to me, is a great example of decentralization of influence, right? Every human being who has some influence has become an ad now. And they can talk about different things and do more interesting things. And that, to me, tells you that the new mediums like Instagram, YouTube, where people have built their own influence on their own, actually have disrupted brands as we know it, ads as we know it, money as we know it, right? And then comes the favorite topic about crypto. And what does that mean to money? Because we forget that humans agreed for currency by creating an interoperable trust, right? Like money is a imaginary concept, right? And we have agreed to accept this one standard. But we forget that this country's love for gold comes from the fact that India probably had around 10, 12 demonetization events before the recent one. And that was when the new kings came, new rurals came, and they introduced new currencies all the time. And people found an interoperable method of trust, which was gold. So all our folk stories, all our childhood stories used to have this guy, ghar mein like sona chupa ke rakha hai, right? Like what was that? They were basically finding an interoperable trust, and this country, any country that has low trust has a high gold interest, because they trust the governance. Any country that is not interested in paying taxes always finds alternate methods of hoarding wealth, because they don't trust the currency. And we forget that currency was introduced through power, right? Like a king came and said, I will ensure that you have protection and you have justice, right? And therefore use my currency, and therefore you pay me taxes, right? We forget that if you don't believe in the regime, you will always find alternate methods of doing currency. Crypto is just one of the methods. In fact, I believe that if any country accepts and says this is my currency, for example, hypothetically speaking, let's say if US government, hypothetically speaking, decides to launch its own cryptocurrency, a lot of people would prefer that and let's say do money laundering through that currency, because now a big power has endorsed that currency. We forget that historically every currency or every religion became big when a supreme leader endorsed it, right? Including religion. Why am I talking about religion? According to me, religion and currency is exactly the same concept. It's a way for multiple people to come together and believe in one system. If you see history of Christianity, Buddhism, Jainism, anything where a king adopted that religion and then it became of everybody's religion who were controlled by the king. Why is this important, right? There is not a single human behavior that has moved from poor to rich or weak to influential. All human behavior has moved from rich to poor. Think of everything like shoes, chandeliers, tables, lights, microphones. First the rich got it, then everybody else gets it, right? Fashion, think of everything, right? We forget that we are only mimicking people who are more influential or somebody who's more rich, and therefore disruption is now much easier to do. You will see a celebrity named Kylie Jenner on Instagram built a multi-billion-dollar cosmetic company, and that was never possible to do because that person is also the brand, also the distribution medium, and all of that. But if you take a Patanjali as an example, it's exactly the same thing. They found a medium of communicating, and then they have productized and monetized that by putting products in that. And it is much easier now to convert from media to commerce, right? In fact, we forget that in malls to attract traffic to the malls, we constantly have some events happening in the mall on the weekend so that the kids can come. And therefore kids will come, then parents will come, and you can monetize that traffic, right? And we forget historically this concept was also true. Like India has lots of temples, and we forget like why did we have so many temples, right? If you take your imagination to a situation where let's say there is one temple in a town, and usually all the shops around the temple used to monetize better because the DAU or daily active users of temple was the highest, right? Because it's a must place that everybody in the town went. And then other shopkeepers are like, this is unfair. We also want traffic, so they started building their own temples. And it may sound funny today, but this is exactly what is happening everywhere, right? Let's say Paytm has launched a section on their app called as News. A payments app is doing news because it drives more daily behavior than anything else. So what I'm trying to leave you with is that lines are blurring. If you think anything is called fintech, it's wrong. Let me tell you, TikTok in China is a lending company. There is loans possible in one click on TikTok in China. So what is it a social media company, entertainment company, fintech company? I don't know, right? So that's my final thoughts. I mean, I would like to make it more interactive and through Q&A versus like going on monologue this way. But I'm here to make you question what you believe. Is it true anymore? And are you prepared for that ever-changing world that we are living in? Thank you.
That was really fascinating, Kunal. And you started by talking about the low level of women participation in India. And I'm sure you would be pleased to know that at CFA community, one of our major objective is to increase the women participation in finance.
Great.
And I keep saying that if Lehman Brothers had few sisters on its board, it wouldn't have collapsed.
Perfect.
I hope that changes. And also about that 14 to 18-year Chief Technology Officer. So fortunately, I have a Chief Technology Officer at home. And talking about that, this looks like a very uncle company. That was very interesting. But extending it a little bit more and putting together those 3 or 4 things that you mentioned about the young people who are actually really driving every decision at home, including the way you are conducting your financial business or investment business or protection business, that for them it's a bit different. So the existing large traditional players, their biggest asset is trust and the existing database because they have the clients. But on the other side, and then you talked a lot about the trust, but maybe you are saying that for these people or the younger people or the new generation, that trust can be built by anybody in a much more easier way than what, let's say, State Bank of India would have done over 100 years, or somebody else would have built it over a very, very longer period?
That's a very good question. I think trust is a very complicated topic and most under-researched topic in my view. But there are some core principles on how trust works, right? So speaking purely from a biological perspective, we are likely to trust people up to our second cousins because it's genetic, right? So there is a genetic trust that is true for all mammals, right? They automatically trust up to the second cousin. Now, coming outside that, and when you get into a strange world, right, we find methods to create trust, right? So currency is a way of creating trust between strangers, right? So because now it's an interoperable format to accept trust. When you extend this further, and earlier, you being living for 100 years, like 200 years old company was good enough for people to create trust because there were no alternate methods of trust. But Uber is only 10 years old, right? And it has probably more customers than SBI now and more transactions than SBI now. If they want to become a bank.
Still larger.
Is that true?
Yeah,
450 million
customers.
Uber has not crossed 400 million?
I don't think so.
I disagree. Probably they have.
Anyway.
But if they will probably cross in 2 years in that case. The point is, the point is that a lot of people who became good at trust did not solve for distribution. And therefore, because they got over-obsessed with trust, right? But trust is much more easier to do because now in Uber, because 2 people can create a rating system. So if there is a 4.5 star driver and 4.5 star passenger, then Uber can just be in the background and let them trust each other, right? Airbnb is a classic example of that, right? Airbnb started from nothing and probably now does 10 million nights a day, which is bigger than all the hotel chains combined, right? So what I'm trying to say is that today technology allows for two people to trust each other. Let me give you an example. Let's say if a payroll company decides to create interoperable loans between the employees, will we have banks? Is the question we should be asking. So I think our fundamental definition needs to shift in the new context, because the younger generation trusts their phone more than a brand, and their confidence on using technology is significantly higher.
But the traditional players, just to take that point a little further, they have the profitability, they have the scale, their ability to invest, they have these customers, so let's say millions of customers that they can, they have. By investing more and building that culture, they can also take advantage of that. So on one side, of course, there is a real threat. You talked about TikTok. I wasn't aware that they are also into lending. But I mean, even the traditional larger players who have the scale and profitability, they can do something similar and protect the profit pool that they have today. Or you think it's going to get demolished?
I think anybody, any company that has an IT department will never become a technology company.
Just like I keep saying that whenever I look at a visiting card and if there is a fax number, then I think about where this company is still, in which era it is living.
The reason I say that is that in today's world, what is not technology? And if you are operating on old principles in a world of 2019 where a youngster is no different than an American citizen, the youngsters are exactly the same. They are global citizens. They watch the same Netflix. They understand the same meme jokes, right? They speak the same language now. By the way, we forget that we are entering into a generation where every youngster speaks one English common language, which was not possible before. So their idea sharing is even more fluid now. So what I'm saying is that in that world, right, if you are not a technology first company, then you can do any business. By the way, you told me TikTok, whether the YouTube of China does lending also.
Oh.
Right? In fact, the top 100 internet companies, no matter what business they are in, they all do lending. So the question is that where is that line anymore?
But still, I think maybe that money is a moat here. Maybe I'm extending that point a little further, that despite those hundreds of companies, including the TikTok and YouTube China, still WeChat, Alipay, UnionPay, these three put together would have something like 60-70% market share. So is still a larger guy who can pump in a lot of money, would still be ahead of some of these innovations?
I think it's not money but network effects. Let me explain that, right? Let's say if English was private company and as a language, like it will become probably a $1 trillion company.
Yeah.
But because you have invested hours and hours of effort to learn English, and I have done that, we are locked in this language. And therefore, network effects are stronger. Just because I launch a new WhatsApp, you will not switch out of it because you've added probably 25 groups over there, have like maybe hundreds of contacts that you chat on a regular basis with it. It's shared with multiple people. Just because I give you a new telco, would you switch your phone number? It's not possible. So a lot of times network effects are poorly understood. But I don't think the older companies understand the core difference between what the network effects are, right? And they are quickly getting disrupted because somebody who's not from the sector altogether, a lot of people don't understand that self-driving cars will disrupt hotels. Because you can sleep in the car now and reach your destination, and you don't need to stay somewhere in a highway anymore.
Also the insurance, if you are not driving the car for 100 days, then why would you pay insurance for 365 days?
Correct. So the thing is that we are forgetting that your competition is not coming from your sector, because the world has become a superconductor now.
Yeah. And then talking about China, so somebody said that I mean the potential for fintech could be $1 trillion. I mean, if you keep expand the three layers, the first layer is the mobile lending, investment, and your insurance. Second is the infrastructure, which provides a platform for the transactions and payments. And third is the ABCD, or artificial intelligence, blockchain, cloud computing, and the data technologies. Now, if there are similar opportunities in India, we look at these three layers, where India is, and in which direction we are moving, and what we need to do more.
I think this order will not be the same for India. It will change and quickly adopt, right? My view is distribution combined with trust will disrupt everything. Technology layer doesn't matter. Even if you do not have AI, but you have distribution and you have trust, you can make a lot of money, right? We sometimes confuse, see, we love to add new vocabulary to say, iske wajah se wo jeet rahe hain. It is not true, right? AI is not making some of these companies win because if you had data, like for example, let's take an SBI. Yeah. The amount of data SBI has is disproportionate, right? What you do with that data is not AI, it's just being able to use the data or even have a centralized data approach, right? So I think technology companies are fundamentally different because they don't think of themselves as in a business. They think that they're business of technology, they're in the business of data, and therefore they approach the problem very differently. I'll give you a small example. The team that did lending in TikTok was an advertising team. They said, if you do an ad, it generates X amount of money for us. But if you do lending, it is generating X plus 30% for us, so we will do lending on the same ad spot. And suddenly an ad team, which is a product technology team, which is running ads, is now becoming lending. And it's very hard for, like imagine an advertising guy is now doing lending. And this is possible in today's generation because the subject matter expertise can be put into an API and given to you.
But ultimately it has to make a commercial sense, right?
Of course.
How do you make money? Otherwise, maybe a lot of these innovations, at some point in time, I mean, there are hundreds of people trying different things in the fintech world, particularly in this city. But then how do you really monetize that? There are very few guys. So for example, in Hong Kong, at least there are a couple of fintech companies which have got listed. Some of them have done well, some of them have not done as well. But I'm not seeing anybody, even, so I was talking to a couple of like investment bankers that any fintech ready for listing said no, long time away.
Yes.
Because nobody is reaching that stage where a serious money can be made.
Yes.
So I mean, these ideas are good, but ultimately you have to make money, right?
The way to look at this is look at other parts of the world where this has already happened, right? A WeChat has significantly large fintech business, but when they listed, they were a chat company. But their upside has come from fintech. Amazon, when they listed, there was no AWS over there. So all the profits came much later, right? So we should not confuse the ability to do distribution in the joy of getting profits first. If you have a moat in your distribution, if you have trust of consumers, and if you have the right per capita customers with you, you can make money. It has proven again and again. But the thing is that a lot of traditional mindset is that they think business is about making profits. The internet companies think that it's about creating distribution first. Because profit is a function of delivering value. If you can deliver value in a lowest possible cost, you will potentially make money. And there are enough examples in the US, enough examples of that in China, where people become massively profitable. But they were not profitable for maybe 10, 15 years minimum, right? Like Amazon is a classic example of that, right? If you look at their market cap trajectory, disbelief, and now it's a certain level because they can now create companies like AWS at will because they have the distribution power to go do that. So I think we forget that, and I think the moment we realize that the technology allows you to enter into spaces you cannot imagine to do because you have distribution and capital, then you will think of businesses very differently. And I think a lot of investors are missing that. Now, will there be a bubble? Will there be a correction? Of course. But can we say internet is real? It is. But the first bubble was like, oh, internet is all full of gas and there is no real thing over there. But look at our lives after 15 years. Everything is internet. So that's the way to think about it in my view.
But despite such a strong adoption, there is so much of innovation that people like you have done in India, and you have seen like across all segments in financial services. We're still seeing that, and you talked about the demonetization, why gold is popular in India, because you had a series of demonetization over the last 2,000 years.
Yes.
And everybody thought till few years back, I mean in presentation I used to take my wallet out and say that few years later you won't use this wallet. None of these things would be required. But in last 2 years, the cash as a percentage of GDP is almost same where it was 2 years ago.
Yeah, because we have not solved the trust problem.
The numbers that you talked about of PTM or what the euro is doing of SPI or what you have done may not be a completely no cash economy, but at least a cashless economy. I mean, less cash economy.
I completely agree with you. I don't think cash can be replaced by digital initiatives. Let me tell you what has happened that nobody has paid attention to. Credit card spends 4 years ago were $1.2 billion, now it's $7.3 billion per month. While we had all these wallet stories going. That is the data to be looked at. Debit card spends has grown up like crazy. So a lot of times we should not look at, see, just because somebody is a poster boy of digital payments, that's not the data point you should be looking at. The data point is everywhere else, right? Will cash go away? No, because I'll tell you when the cash will go away. Systematically, when we have a lot more tax-paying people, cash will go away. Have we solved that problem? Have we increased the motivation of people to pay taxes? No. Because we are fundamentally a mistrust nation where we don't believe the regime is spending for our advantage and we are trying to save our own money on the side and avoid taxes. Till that happens, why would the need of cash go away, right? In fact, I believe a billion-dollar company can be created by creating great cash management solutions for SMEs because they don't know how to deal with cash.
But I guess a lot of people are doing here, or at least trying.
No, I think tech entrepreneurs are not focusing on cash.
Now you also have that GST and advantage. There's so much of data that will be available to them.
Yeah. So think of it this slightly differently, right? A lot of people think investments is a pull product, right? In global markets, my answer is very simple. Anybody who does not understand the concept of compound interest, you will always have to push investments to them, right? Anybody who understands the concept of compound interest, you don't have to push to them. They will come to you to get returns. So I think we fundamentally forget that markets have different dynamics and you have to play them differently.
So I'm told, since you talked about those credit card numbers, that UPI transactions have already overtaken MasterCard plus Visa plus Amex put together.
Yeah.
And now with person to person, then person to merchant,
yeah.
with UPI 2.0, you think that's the one which will take us from cash to maybe completely digital?
It'll never be one thing. According to me, the journey of payments are going to be, first is prepaid, so you are loading the wallets. Now it's current, which is UPI. According to me, everything will move to postpaid, because pay later, right? Most of us love to pay later. If this is true for every single human being, then the products will shift to that. Now, is it going to come in a form of credit card? Will it come in form of Zest money? Will it come in form of any other format? We don't know that. And it can never be one format.
And also in terms of innovation on that front, so we are seeing very interesting things like PhonePe using Bluetooth, or Google with audio QR, with Paytm like QR codes scannable and all of that. Any other interesting, and you talked about WhatsApp, which is in beta version, but some of the other innovations that you are seeing in the payment space that you would like to highlight?
I think we overestimate people's joy of using technology, right? Most people like simple things, right? I believe that the solution that will do better is going to be one which requires the least amount of training effort and least amount of friction and more reliability, right? So if you could, just the way you can send pictures on WhatsApp, you can send money, that will be bigger innovation than all of this audio QR and all of that stuff, right? And I think the mistake we do is we look at what happened in China and then think that yahan pe bhi same hoga. We are very fundamentally different kind of people. And the only thing common between us and China is population. That's where it ends.
There's an article a few days back in Financial Times, and it was a scathing attack on non-regulation of fintech, and it said that Amazon knows that you are wealthier and that's why they charge more for a pair of shoes, the discrimination that can happen, and also because there is a lack of regulatory oversight, the risk that people can end up taking because of some of these platforms. In which direction you think regulation is likely to move? So as of now, there's a big advantage for the fintech companies because there is regulatory oversight. I may use the word lax, or maybe far lesser than the traditional banks or other institutions.
India probably is most regulated compared to any other country I know. In terms of what you are saying is exactly the opposite of what I observed from the world. If you systematically stop innovation by using the regulatory card, you are hurting the nation.
But we have seen that, like what happened to eKYC on usage of Aadhaar and some of the other things about the keeping the data here in India. I mean, some of the global guys who had a big pledge.
Let me ask you a question. India. When the first knife was invented, do you think it must have cut the hands of somebody who made it or not?
No.
You would have probably cut it.
Yeah, may have cut.
But did we stop ban? Did we ban knife after that?
not really.
We did not ban knife, right? We'll use the knife. If WhatsApp was invented and somebody shared some fake news, did we ban WhatsApp because of that, or we realized how to
really.
use WhatsApp better?
Yeah.
So the thing is that we tend to take point in time events and make a big deal about it. Is eKYC good for the country? The answer is yes. Did somebody took advantage of it? Can be fixed? 100%. But that's happened to every single innovation in the history of humans, right? But the simpler version to look at it is that if a country, and you talked about unfair prices to the rich and this, first of all, this question is wrong because we don't understand capitalism only. Let me ask a question. How many of you think MRP is good for the country? Products have MRP on this, right? MRP 6 rupees. Is this good for the country or bad for the country? Good for the country, please raise your hand. Most people are doubtful over here, right? And if you say this is good, then please read up on capitalism, right? If you do not charge more to the rich and less to the poor, you are fundamentally not creating capitalism. Because the benefit is not going to the poor, the benefit is going to the rich. This product should be priced $2 in good neighborhoods and probably 2 cents. And therefore, in US, a bottle is sold for anywhere from $10 to 10 cents. A Coke is not one price over there. A Coke can be sold for $3 to 10 cents. And that's how capitalism works. But we have fundamentally socialism in our blood. Therefore, we ask certain questions like this.
Yeah, but the people who frame the regulation, people who govern, I think it's unlikely to change in the very near term. So I keep saying that. I mean, the attitude here is that give me a problem, they won't say I'll give you a solution, they will say I'll give you a regulation.
Let me ask you what is easy. Let me ask you a simple question. What is easy, regulation or innovation?
Of course, the later, but I'm saying our attitude
No,
has
it's
been,
former. Regulation is the easiest one to do. Because you
sorry,
can copy.
I mean, you're saying which one you like.
No. Which one is easier to implement?
Oh, regulation.
Yeah, because it takes, you can take a regulation of another country, copy paste it and bring it over here. We forget that our constitution was copy paste also, right? We just implemented what was there.
You know, the interesting thing about entrepreneurs like you, we have seen in US, there's a great wave of de-equitization. The number of companies listed in US have gone down by half in the last 20 years.
Yeah.
And this has been the most, I would say, innovative period and a great wealth creation. And we are seeing a similar thing in India. Maybe a lot of new gen companies, new gen promoters like you don't want to come to the public markets. Do you think there's a fundamental change in the way entrepreneurs think, where there used to be a dream of getting listed one day? Is no longer the case?
That is true, because let's say Indian stock market, you cannot imagine to get listed without profits. Because the market has been trained to look at companies in a certain way, right? Even now, after me giving 45 minutes of distribution is more important than profits, how many people will go back believing me? Very few, right? So the question is that if that is the market view, then why sell to the masses? There are 10 people who understand it and they have disproportionate wealth. They will support you. In fact, the wealth is getting concentrated because of that, because these guys are compounding wealth even faster because they get it, right? I remember Jack Ma once made a statement that I mean, it's probably a mistake to list a company, right? And this is Alibaba at that scale, because there is enough private wealth which is now supportive of large distribution business which creates disproportionate profits, which may actually hurt people because the wealth creating opportunities will disappear for you. Right? I think that is fundamentally being different, right? Will it happen more and more? I don't know. Maybe the consumers will evolve to understand that now you should look at companies differently. But it will be probably driven by at least this group of people. If you see companies differently, you will promote people under you to think of look at companies differently, and therefore the new things will come, right? But shift of behavior takes much longer. Right? Can I fundamentally tell you that we don't look at this over one generation? Not possible. Right? It will take years and years. Look at the market cap concentration on technology companies now in the top 100, top 200 companies. Do you think this will not happen in India?
No, it will.
So that's the answer to look at this.
You know, when we think about the digitalization of finance in India, the financialization of saving, financialization of assets, disintermediation, and all of these, and of course, there's going to be a great future for, let's say, digital finance. And I just think corollary of, and correct me if I'm wrong, let's say 10 years back, if I told you that as an investor, that in India, there would be from 100 million, there would be 1 billion mobile users. Data usage will go up by like some 30, 40, 50% per annum. And then, at that point in time, telecom companies were making 40% EBITDA margin. 10 years later, actually the sector has done far better than what anybody imagined, but they are all bleeding.
Yeah.
Something like this, can it happen in financial services that because of the way the whole field is changing, actually the return on equity just collapse? I mean, nobody makes money because every profit pool gets
That's a
killed.
great question. If you take a very simple example of what, let's say, organized retail did, right? They basically made few products loss leaders, right? So they made milk and bread. They're actually bleeding money on that because they use that to get customers to come to their stores, change their old behavior, and upsell and cross-sell other things on top of that, right? If any industry is holding on to the rent-seeking behavior of profit they should not be making, why is the government systematically going after payments margins? That for passing bits of information you are making 2% is not fair. So systematically government has been going after that and brought down the cost. UPI cost is marginal to, let's say, some of the older rails, right? So if you are going to make a business in future, think that payments se paise karmaunga, it's not possible. You cannot make money from payments. But can you use payments to create other businesses to upsell, cross-sell other things? That is the opportunity, right? So systematically you will see some businesses from profit pools become just customer distribution pools, right? And that will continue to happen, right? Why did Facebook want to give free internet to the country? When the same thing, right? Now when Jio did the same thing, we thought it was innovation, but Facebook wanted to do the same thing, but we revolted against that, right? And said that you should not do that because they wanted to accelerate the adoption even faster because they can make money somewhere else, right? So systematically you will see industries of the past cannot survive unless they find more innovative ways to upsell and cross-sell, right? And therefore, not just financial services, I would say every single business is fundamentally at risk. I mean, let me ask you something, like, for example, a lot of brokers make 1-2% on, let's say, apartment rentals or whatever. Do you think somebody will not come and disrupt that and say, I will make money on upsell, cross-sell? I will upsell, cross-sell more things to the apartment? Maybe it will happen. Like growth of co-working spaces like WeWork and others is a function of saying that it doesn't matter, rent cost we can be reducing and upsell, cross-sell more things on top of that. Now, can you do upsell, cross-sell? Is a function of how good your product is, and that is what's going to be tested. But systematically, profits will be used as a method for shifting customer behavior. It's true for entire human history.
But wherever there is a margin, so let's say talk about our industry, or wherever there is a profit pool, somebody is providing a free service, anticipating that one day I'll monetize that data and I'll cross-sell. But I'm not sure how easy that is. So maybe we can take the example of Cred. You're doing something similar, right? I mean, just targeting those, I won't say wealthy customers because you said people follow wealthy, they buy chandeliers or sofa because wealthy people were doing it. I don't know if that's the reason
No.
we're targeting people that. But how will ultimately you monetize it?
So, if you think simply, right, if we are going after, let's say, customers whose per capita is slightly better than the rest, and we are not going for wealthy, we are going for people with high
And I'm
credit
just
score.
joking because you mentioned that people
No,
follow
behavior
wealthy
shift
people.
is like Facebook started only with Ivy League colleges and then moved to everybody else, right? There are hundreds of examples of that. So the point is that if we have an engagement app, right now, if I can drive people with offers, right? Like right now, let's say we are driving, let's say, thousands of customers per month for, let's say, a gym chain to get trials, right? Will they pay me money to acquire new customers? 100%, right? So I'm not interested in the payments margin. We are a marketing company. We believe marketing has disproportionately more money than payments. Payments is a great way of attracting customers in, but the money is, see, when two people compete, all the money is made. Let me give you examples of that. Coaching classes, matrimonial websites, dating sites. Every time humans or companies compete, you can make a lot of money. Because people will, who's likely to have more budgets, CMO or CFO? Like CFO is most likely be told to cut down cost,
CIO.
but CIO probably has got a better thing. So the thing is that you can disproportionately make money by attracting monies for growth versus trying to make on optimization of a tool. In my view, payment margins will become close to zero, or if they have not become already. And therefore, everybody has to innovate and create more things on top of it. We will create money on marketing models. If today we can launch a new brand on the app and get millions of people to adopt it, isn't it better than doing a full page ad somewhere else? And therefore, we
But
move
you
that
think
money.
at some point in time from a regulatory perspective, so let's say in Cred, I don't know the full model, but you would be accessing my emails, you would be accessing my SMS or my messages, etc. and all. And at some point in time, there is so much talk globally about regulating the, whether the private profits versus public property, whether data is that. You see a risk of all of these models which are completely based on getting access to customer data?
I don't know any model that is working today, including banks, which is working on not having data. I think data is an important aspect to provide better service, right? In fact, globally, healthcare is going into that mode also, where all the devices are tracking your health parameters, and now insurance cost is dropping because of that, right? If by providing data, if your car insurance cost drops by 40-45%, would you want to give that is the question. Now the question is that when we use the word privacy and use that as a way to protect old industries, right, the consumers will make that choice, right, and consumers are already making that choice, right. Our goal is that if systematically we can use that data to bring them better deals, if we can reduce their insurance cost, if we can reduce their cost of, like, what if our customers don't have to pay deposit for getting a car rental, right? If that is what is possible by showing that, like for example, you go apply for a visa, you give so much more data to go into Singapore or US. So how is that different to this, right? So the question is that if data helps you significantly improve your life because somebody can recognize you differently, that's been historically the case for everything. So I think a lot of times we confuse those debates to what the model is. Now, will we create an advertising platform? Absolutely not. Will we ever sell data? Absolutely not.
You will not do that
Ever.
Okay.
Ever. Because that's the model for an advertising company. For me, I'm the platform where consumption is itself happening. Why do I need to give it to somebody else? I'm not running some TikTok, I have to run ads and make money on top of that, right? It's a financial platform, right? Where we are most anal about consumer protection and data, and then anything that has to be done on the platform.
So in that case, the e-commerce companies, and now that there is artificial intelligence and facial recognition and several things where it's not only what you're buying, but they know what you're going to buy, at what point in time, and from what source and how you're going to pay, they will have a huge advantage even in terms of what they can provide in financial services.
Let me ask you, you're a chief investment officer. Do people who can predict future make more money than others?
Logically.
So the answer is yes. Do we have better tools to predict future?
Of
Yes.
course, yes. And now,
Are the tools getting better? Yes. The answer is very simple. If today you knew which 20 companies are going to disproportionately make money, private, public, right? You will do extraordinarily well. So I think that technology is possible today. A lot of times we are not adopting the technology and investing behind that as much.
Because I think the access they have is far more than any traditional player in financial services.
Absolutely. I believe that, I don't want to use the word data and AI. I think anybody who will be able to predict future more accurately and consistently will create disproportionate wealth.
Because you read a lot, and I think we have already overtaken the time, but because you read a lot and particularly on behavioral investing, so for our members from the CFA community, any thing that you want to share that from a behavioral investing perspective, any pulse of wisdom that you want to share as an investor?
I want to give you some interesting stats. We in our surveys have found that 70% of people who have credit card believe that the interest rate on their credit card is less than 20%. Now trying to sell investments to these customers is harder who fundamentally don't understand interest rate. So please be careful that investment is something that you can teach people when they understand what is interest rate and compound interest. Without that, you are trying to sell something more advanced to these customers, right? So I would go fundamentally into that. And the second thing I would say is that, see, in this country, investments are sold through push methods like of insurance or things, because we fundamentally don't understand the value of some of these things, right? Unless you educate people, like a lot of people think fixed deposit is a great idea, right? And because you don't understand the concept of inflation and all of these things, and half the room over here raised hand, MRP is good for the country also, right? So like we are fundamentally need to create awareness, right? Understand the concept at a more core level. I don't think our education system has done a great job for us, and therefore at least this group should spend a lot of time communicating to people. In China, I know all the smart investment managers have done a great job of creating their own information channels on social media over there, and they have millions and millions of followers where they advise people on what to do. So I would advise a lot of people to just say that create awareness and use the new tools in today's world that are available to create some equity in your own views, and then disproportionately you can create wealth after that.
How do you hire people and keep them motivated?
We tell them we are not uncle company.
So you only hire people below 25, or I don't know whether 20?
I try to. I have told my team that I should skew the average of the company's age disproportionately. So I'm 39. So I tell them then you have to bring the average age to 24, 25. The reason we are going for that younger age is that because I don't think the smartness is any different. They don't have exposure. In the past, people were valued based on how many years of experiences you had. I think in future, people will be valued by number of experiences you have per year. I think that is a fundamental difference.
And then what do you do to ensure that few years later, I mean, nobody walks into your cabin and say that, oh, you are a very uncle-like company, I don't want to work here.
First rule, don't have a cabin.
Okay.
Then nobody will feel that.
I'll dismantle mine tomorrow.
Yeah, I don't even have a desk in my office. So if that makes you, I work out of my cafeteria, I sit with the teams. I think the world we are living in, right? If you really want to, this is the first time, this is the generation where I can learn from people who are older than me and people younger than me. Usually it should be only the opposite side. I think in that world, you have to remove all these barriers and walls of information and knowledge seamlessly sharing with each other.
And then particularly people who are working in your, I don't know whether you use the word department because that's also very uncle-like.
Yes.
The people who deal with finance in your company, what do you tell them?
Well, I think the finance function is a thing where we tell them that please figure out a way to solve things, legal finance versus trying to say how things cannot be done and how can you block that and why is this not good. So one thing we tell them that your job is service and not power. Right? When you tell them, because historically they believe that if they control finance, they control power on how money will be spent, and then people have to request the finance team. We tell them you have to become a service department and then question them on metrics and not like just generally power. I think historically people have this view of, oh, they will follow up with me for this bill payment and follow up with that. Like for example, in our company, we don't pay salary at the end of the month, we pay the salary at the beginning of the month. So the power shifts in favor of, and this is with a culture of trust, right? Everybody in our team is above credit score of 800, and that's a need to join Cred. And we also do is that because we trust people, we, like for example, we give a MacBook when you get an offer letter from Cred, and because we trust you to come join and not disappear. Like a lot of people don't join after taking the offer letter. We have zero attrition after that because we trust them first.
But the other thing is, if you hire anybody from a finance background, he'll think about return on capital employed, return on equity, cash flow. I mean, he thinks about what I've earned today. In the companies like yours is how much you have burned today. How much cash is getting burned rather than how much cash is getting earned.
That is the key difference between when you're working for a technology company. If they have not studied how Airbnb has worked, Amazon has worked, all of these companies have worked, then they're applying principles of past companies, right? So I think massive unlearning is required.
And when you meet the other, as an investor, as an angel investor, the other prospective companies or other entrepreneurs, what is that you really look for? I mean, you can, mostly about fintech, let's keep it there.
So two things I look for. One is that, do they have a clear core insight that nobody knows about, right? Do they have a sharp understanding about the business that most people tend to miss? And the second is that in that meeting, is the person giving you energy or is taking energy away from you? If they're giving energy and they have a core insight, that's good enough for me.
So what's that superconductor or something that you use?
Well, it's just if somebody has energy emitting capabilities, they don't need external fuel to feel motivated. They're just driven.
And do you really believe that? I mean, I mentioned that, and that India really missed the bus on variety of things over the years, but this great combination of things just falling in place with Jan Dhan Yojana, I mean the financial inclusion, mobility, ubiquitous data, I mean every single thing, Aadhaar, and then that entrepreneurs like you and the ecosystem developing, we can actually be a world leader in digital finance?
We have the ingredients, we do not have the motivations. And let me explain that.
And what we can do to build that motivation?
Yeah, let me understand like finance. Actually, let me ask a question. How many of you know what's your salary per hour? Please raise your hand. Okay, 10, 15%. If I had asked this question I had asked the same question at IIM Ahmedabad alum event and IIM Bangalore alum event, most like 1% raise their hands, right? If I ask the same question in the US, everybody will raise their hands, even if they are paid a monthly salary, because their first salary was an hourly salary. Sorry, first job was an hourly salary job. So their unit of time is an hour, right? But because most of us were paid a monthly salary, we don't understand the value of time. And therefore, when you don't understand the value of time, we make poor decisions with our time. And I think to get all of these things going, and the reason we are not an industrial nation, because we don't understand the concept of productivity. Right? If you tell a lot of these guys that guys from tomorrow your salary is about per hour and actually based on the performance, everything is variable salary, everybody will leave. And that's why we are fundamentally a country that is not going to break out on per capita income or any of that, because we don't understand the core concept of how capitalism works.
So what is that can be done?
No, I mean, what I would recommend in your organization, if you can start writing down in the salary slip what your salary per hour is. So then when they realize that their salary per hour is 6,000 rupees, they waste 30 minutes looking for a discount of 100 rupees, they will know that you are making a mistake.
And maybe trying to improve your rating on your Cred app also.
That helps, that helps, but most people don't know their score.
As long as it helps Kunal, it's okay.
Well, as long as it helps capitalism.
I'm just joking.
Perfect.
Yeah, and I know maybe that the last thing that, you know, because of people like you, the word disruption has got a positive connotation now. That's very interesting. And
let me put it this way. Human species has constantly evolved and will continue to evolve. Disruption is a word mostly used by people who are trying to protect what they have built. But let me tell you one thing, nobody is safe, right? No company is safe, and their disruptor is most likely already born.
Completely agree. I mean, it's disrupted versus are you disrupting? And Alan Kay said that the best way to predict the future is to invent it.
Yep.
So you're not only predicting the future, but I'm sure you are inventing it. But I must say this before we walk down, that in one of the meeting I heard you saying that it's not necessary to be an MBA to be an entrepreneur. But I would advise people here who are not CFA charter holder, it's good to have a CFA charter to become a great investor. Thank you so much.
Thank you so much.